Before I start this video on the potential future direction of mortgage rates and the Bank of England base rate, if you find any of this useful, please make sure you hit that like button, but also subscribe to the channel because I provide these updates from month to month and often there's quite a bit of change. So let's kick off with this month's review. The Bank of England increased the base rate on the 23rd of March 2023 by 0.25%, taking it to 4.25%, and that's the highest level for 14 years. It's also the 11th consecutive increase by the Bank of England, which is unprecedented. So what does that mean for mortgage borrowers? Well, if you're on a fixed rate mortgage, then your mortgage repayments each month will stay exactly the same. But if you're on a variable rate mortgage or a tracker mortgage, then you're likely to see your mortgage rate go up by a similar amount. That's that 0.25% increase. So what does it mean for your actual pounds and pence repayments? Well, for every £100,000 that you've borrowed in a mortgage, then you're likely to see your monthly mortgage repayments go up by £13 a month as a result of this latest increase by the Bank of England. So if you do the numbers, if you've got a £200,000 mortgage outstanding, then your monthly repayments are likely to go up by around about £26. So what's going to happen to the base rate going forward? Are interest rates going to keep going up? Are they going to be cut? Much depends on the economy and in particular inflation. If inflation keeps proving sticky, so they can't get under control, then the Bank of England is likely to continue to keep increasing the base rate, and mortgage rates therefore will respond in turn. So UK inflation right now sits at 10.4% after unexpectedly rising in February 2023. It means that inflation is still well above that 2% official target, having been as high as 11.1% back in October 2022, which at the time was a 41-year high. Now, everyone wants to know where interest rates and mortgage rates are likely to head in the future. And we provide an article on the Money to Masses website, which we link to in the notes of this video, where I regularly update on the market predictions of where the base rate is going to go. So you can use that to therefore draw conclusions on where future mortgage rates are likely to be. But on screen at the moment is a chart summarizing the current market predictions of where the base rate is likely to be over the next 5 years. Now, the market, you'll see, is currently pricing in further rate hikes in 2023, predicting that the Bank of England base rate will rise as high as 4.6% by August 2023 before slowly falling over the next 5 years. And you'll see it's going to sit around about 3%. That's the current prediction. Now, worryingly, this predicted peak that's going to hit in August 2023, that peak in the base rate is actually higher than what was being predicted a few weeks ago. And that's because people have grown concerned about how sticky inflation's proving and that the Bank of England might have to raise rates a bit more aggressively to combat inflation. And that's particularly after the February increase that was unexpected. So looking at the chart, you can see where the base rate is being predicted to be, and it gives you a sense of where 2-year and 5-year fixed rate mortgages will gravitate towards. So currently the market is pricing that the base rate will be around 3% in 5 years' time. So you get a sense that the best mortgage rate deals for a 5-year fixed mortgage will be above this level. And in fact, they are currently around about 4%. So you can use this chart to get a sense of where rates are going to be gravitating towards. But you're looking at the best rates. The average rate, of course, will be much higher. The positive news is that the mortgage rates on the best fixed rate deals have stabilized of late, and there are signs that they're beginning to creep lower ever so slowly. So that is good news if you're looking to fix your mortgage. So in summary, if you're coming to the end of your fixed rate deal or you're thinking of getting off your tracker rate mortgage or variable rate mortgage, perhaps you're on the lender's standard variable rate, or you're trying to decide whether to take out a new fixed rate deal or take out a tracker mortgage, then you should seek the advice of a professional mortgage advisor, and they will search the market for you and find the best deals based upon your personal circumstances. Because don't forget, the deal that you are able to secure will depend on factors including your income as well as your credit report. Now, if you don't know a mortgage advisor that you can trust, you will find a link to that article I mentioned earlier in the notes of this episode, and you will find links in there where you can find be able to get a full mortgage review and find a mortgage advisor that you can trust. So if you found this video useful in any way, then please make sure you hit that like button. But as I said earlier, make sure you subscribe to the channel, because I make these regular updates on the likely path of interest rates in the UK, and the predictions have been changing quite rapidly.